Good day, I'm Elizna from Westhuizen from the Accounting Standards Board, and today I'll be discussing with you GRAP32, which is about service concession arrangements from the grantor's point of view. The presentation will also include a few slides on IGRAP17, which is about the service concession arrangements where the grantor has a significant residual interest in the asset at the end of the service concession arrangement. So the reason why we are recording this for you today is because both these pronouncements become effective on 1 April 2019. So please feel free to use this recording to assist you when you implement both pronouncements. So just an overview quickly on what I'll be taking you through today. From GRAP32, firstly we'll look at what is a service concession arrangement and who is the grantor. Then I'll just briefly tell you what the accounting problem is that GRAP32 aims to resolve. We'll look at the key principles of both GRAP32 and IGRAP17. And then I'll speak to you a bit about first-time adoption of both pronouncements, how that works. And we'll look at the changes to other standards as a result of GRAP32 becoming effective. Lastly, I'll just quickly take you through some of the impacts that may result from implementing GRAP32. So firstly, if we look at the definitions, what is a service concession arrangement and who is a grantor? So a service concession arrangement is a contractual arrangement between a grantor and an operator. And the necessary aspects of this contractual arrangement is that the operator uses a service concession asset to provide a mandated function on behalf of the grantor, and it is for a specified period of time. Also, the operator is compensated for the services over the period of the service concession arrangement. It's important to note that it is a contractual arrangement, so it must have the characteristics of a contract, which includes that there must be willing parties, it must establish rights and obligations, and there must be enforceability in place. Then part of the definition of a service concession arrangement is the service concession asset that the operator will use. So a service concession asset is used to provide the mandated function on behalf of the grantor in the service concession arrangement. The operator can either provide the service concession asset, or it can acquire or develop or construct the service concession asset. Alternatively, the grantor can use one of its existing assets, or it can upgrade one of its existing assets to meet the requirements of the service concession arrangements. So there are basically four ways of this service concession asset being made available for the arrangement. Then lastly, let's just look at the definition of a grantor. So that is the entity that grants the right to use the service concession asset to the operator. So it's important to note just that the standard deals with the accounting from the grantor's perspective only, not the operator's perspective. The grantor is always the public sector entity, whereas the operator could be a private or a public sector entity. So just a few examples of what service concession arrangements and service concession assets could be. You may be familiar with legislation, the PFMA Treasury regulations as well as the MFMA regulations. Both define public-private partnerships, and both legislated public-private partnerships will be included in what the definition of a service concession arrangement is. Then, for example, if you think about water service authorities, they are often district municipalities that own infrastructure assets for water services, but they may then enter into a service concession arrangement with another entity, which could be a private entity or, for example, a local municipality, to operate the service concession assets on their behalf, and therefore to provide the water services on their behalf. So that's another example of a service concession arrangement. The The service concession assets that we typically see being used in the public sector would be, for example, roads or tunnels, bridges, prisons, hospitals, those kinds of assets you could look out for. Then the next thing that we are going to look at is what the accounting problem is that GRAP32 tries to resolve. So as you may guess from the definition of what a service concession arrangement is, there are a few things to consider when it comes to accounting. And the first thing is the service concession asset. So it's important to understand who should account for the service concession asset between the grantor and the operator. And because we are just looking at the accounting from the grantor's perspective, we'll understand now in this presentation when the grantor controls the service concession asset and therefore is the party that recognizes the service concession asset. Questions are also asked about when do you recognize or derecognize the service concession asset if you're a grantor, and how do you measure that? So we'll look at that. Then with the service concession asset comes a service concession liability. So we'll also look at the service concession liability and how the accounting works for that. Then just to give you some perspective on the environment, also on what the problem is that this GRAP32 tries to resolve. So there is updated public sector specific guidance that came into play, which is why GRAP32 was developed by the board. You may be familiar with the guideline on public-private partnerships that was issued by the board in 2008, and that document precedes GRAP32. So the public-private partnership guideline was based on IGRAP 12, which was the guidance that was available at the time. There was no public sector specific guidance, so the board used IGRAP 12 as the basis for the guideline. Then the IPSAS B in 2011 published IPSAS 32, which introduced public sector guidance on service concession arrangements, and as a result the board developed GRAP32 to be also based on public sector guidance that became available in the sector. If we look at what the key principles are of GRAP32, then on slide 13, just a summary of the things that we'll look at, what the key principles are, and we'll look at each of them in a bit more detail in the coming slides. But firstly, how to account for the service concession asset. So there are a number of trigger points that I've highlighted to you already. For example, the asset is recognized when it is controlled, so we'll look at that. Then how is it initially measured? So it is initially measured unless it is an existing asset of the grantor. So if it is an existing asset of the grantor, it's a reclassification of the asset that's necessary and not a remeasurement necessarily. Then service concession assets are a separate class of assets, so we'll just look at how that is presented. Then how to account for service concession liabilities. There are three models that the standard introduces on how to account for service concession liabilities. They are the financial liability model, the grant of a right to the operator model, and then there is a combined model as well. So we'll look at each of the three models. Then lastly, on presentation and disclosure. So the aim of presentation and disclosure is to provide information to the users that will enable them to understand the impact of the service concession arrangements on the entity's financial position, performance and cash flows. So we'll have a look at what disclosures will meet that objective of disclosure. So firstly, let's look at the service concession asset. There's a summary that I've included for you on slide 14 on the recognition and measurement of service concession assets. So as I've indicated to you before, there are basically four different ways that a service concession asset can be introduced for the service concession arrangement. So the first one is to use an existing asset of the grantor. In that case, it's a bit different to the other three models in that there's no specific initial recognition or measurement required. We have a summary of the recognition and measurement requirements in GRAP32, and we'll look at that in a bit more detail as well. But if you can recall from the definitions, there are 4 different ways in which a service concession asset could be contributed to the service concession arrangement. So firstly, it could be an existing asset of the grantor. And that is a bit different to the rest. In this case, initially there is a reclassification of the existing asset from whatever class of asset the grantor had the asset in to a service concession asset class. So that is the only change that is made on initial recognition. However, if there is a change in the use of the asset as a result of it now being contributed to the service concession arrangement, it may be one of the indicators of impairment that the entity would need to assess, which is the grantor. So that would be in terms of GRAP21 or GRAP26. Then the grantor would also still need to assess whether they control the asset, and if as a result of now using their own asset for the service concession arrangement they no longer control the asset, they would need to de-recognize the asset. Then if it's an upgrade of the existing asset of the grantor, as well as when it's an existing asset of the operator that is contributed to the arrangement, in both cases the grantor assesses control of the asset, and if control is met, it is initially measured at fair value. The other option is for the operator to construct or develop an asset specifically for the service concession arrangement. In that case, there is a question about firstly control by the grantor, which needs to be assessed in the same way as the other assets are assessed, and the timing of when the work in progress versus the finalized asset should be recognized needs to be assessed by the grantor if they do control the asset. So in this case, the terms and conditions of the service concession arrangement would need to be assessed, as well as the recognition criteria in the various asset-related standards of GRAP, which could be GRAP16 or GRAP17, etc. So that requires the grantor to assess whether there will be future economic benefits or service potential from this asset, and whether it can be measured reliably. So that is in addition to the control criteria specifically in GRAP32. Then initially, once this asset is recognized, it is measured at fair value as well. So let's look at the service concession assets recognition in a bit more detail. We spoke about the grantor recognizing the asset when they control it. So paragraph 7 of GRAP32 sets the criteria for when a grantor controls a service concession asset, and that is when the grantor can regulate the services that the operator must provide using the service concession asset, also to whom the services could be provided and at what price. So that is paragraph 7a of GRAP32. Then the second criteria is GRAP32 paragraph 7b, which says that the grantor must also control, either through ownership or through beneficial entitlement or otherwise, a significant residual interest in the service concession asset at the end of the term of the arrangement. So the only exception to that is if it is a whole of life service concession asset, meaning that the lifetime of the service concession asset is the same as the service concession arrangement. In that case, there will be no potential residual interest in the asset left at the end of the service concession arrangement. Therefore, paragraph 7b of GRAP32 does not apply. So the grantor only needs to assess whether 7a is met. So just on the recognition of control to consider, it is not the regulatory powers of an entity of government that is assessed when the entity assesses paragraph 7a, which talks about whether the price could be regulated, for example, and determining to whom the services could be provided. So if the entity is a regulator in the sector, that is not assessed as part of assessing control. Only the terms and conditions of the arrangement is assessed to determine if control exists or not. Then if the grantor concludes that it does not control the asset, then it should still apply IGRAP3, which is about determining whether the arrangement contains a lease, to determine if it may be an operating or a finance lease. And if so, then the grantor applies GRAP13 on leases. So let's just look at an example of the recognition, which links to what I've explained to you now about how assessing control works. So let's say Department X enters into a service concession arrangement with a private entity, which is the operator, to operate a road. And this department is responsible and has the regulatory functions for the toll tariffs and sets the toll tariffs for all roads. Then the regulatory powers of the department do not mean that the department controls the service concession asset. So it does not control because it can set the price for toll tariffs automatically. The terms and the conditions of the arrangement need to be assessed and not the regulatory powers of the department. Then example 2 that we also have for you to consider is if public entity X, for example the grantor, regulates a hospital, which is the service concession asset, and it does control the hospital in terms of paragraph 7a, but not the hospital shop, which is part of the hospital, it can still conclude that it controls the hospital because the hospital shop is just an ancillary asset and it's not the main activity of the hospital. Then next, on looking at the service concession asset, we are going to look at the measurement initially at fair value. So as I've explained to you, all assets are initially measured at fair value, except when it's an existing asset of the grantor, which will just be a reclassification of the asset from its existing class of asset to service concession asset class. So how to determine this fair value? It depends on the arrangement. So the arrangement could require the grantor to make a series of payments for the asset to the operator. Or it could require the grantor to determine or to provide the operator with a right, and this right would typically be to earn revenue from using the service concession asset from third parties, or it could be providing a different revenue generating asset to the operator for the duration of the service concession arrangement. So that's typically the two ways in which the grantor will compensate the operator for the service concession asset as well as for the services that the operator provides. So if the grantor makes a series of cash payments or financial asset payments, if it's not cash, to the grantor, then the fair value is the portion of the payment that relates to the asset. So typically the payments that the grantor makes to the operator would be partly for the asset and perhaps partly for the services provided by the operator. It's just the portion of the payment relating to the asset that's used to determine the fair value of the asset. Then the payment, like I said now, includes not just the asset but for the services as well, and it could be structured in such a way that it's easily separable between the parts, or it may be difficult to distinguish which part of the payment relates to the asset and which part relates to the services. So let's start with the easier one first. If the payments are separable, the cash price equivalent of the asset would be the fair value of the asset portion of the payment. If it's not possible to separate the payments that the grantor makes between the asset and the services, then an estimation technique would need to be used to determine the portion that relates to the asset. And that would typically be an allocation of the payments between the asset and the services based on the relative fair value of the two components. Then if it is a scenario where the grantor does not make a series of payments, but rather grants a right of use of the service concession asset to the operator so that the operator can generate revenue from that, then fair value is determined similar to how an exchange of non-monetary assets is valued in terms of the different asset-related standards. So that is explained in GRAP17, GRAP17, GRAP31, as well as GRAP103. Subsequent measurement of the asset will be in accordance with the applicable standard of GRAP. So it will be in accordance with GRAP16, 17, 31 or 103, whichever standard is applicable. And the entity may also need to consider impairment. Therefore, GRAP21 and GRAP26 may also apply. If we look at an example of measuring the service concession asset, let's say public entity Y enters into a service concession arrangement with company Z, where company Z provides a communication network, which will be the service concession asset, and it operates the communication network on behalf of public entity Y for the duration of the service concession arrangement. We can assume for purposes of this example that the grantor controls the asset, and the grantor makes a series of monthly payments to the operator, which is 50-50% split between the portion that relates to paying for the asset and the portion that relates to paying for the services of the operator. So in this example, the present value has been calculated to be 10 million rand, which is then divided 50-50 between the asset and the services. Therefore, the public entity determines the present value, which is the fair value, to be 5 million rand for the service concession asset. In this example, the present value of the asset, which is 5 million, was not more than the fair value, so there's no adjustment necessary. Then another example that we can consider is if the same information applies as in example 3, but the service concession arrangement does not determine the split between the portion of the payment that is for the asset versus for the services of the operator. What the entity would need to do then is to consider what the fair value is of either portion. So in this example, with reference to a similar agreement for a service that is similar to what is in this service concession arrangement, the grantor was able to determine the fair value of the service portion only to be 5 million rand. Therefore, deducting the 5 million rand from the total 10 million rand present value leaves us with 5 million rand present value, which is also the fair value of the asset. So the service concession asset would therefore be recognized at 5 million initially. Then lastly, on the service concession asset, if we look at presentation, so importantly to note that it is a separate class of asset, the service concession asset class. And there's an example on slide 22 that just illustrates to you, if it is an item of property, plant and equipment, that you will have different classes of assets, which could be land and buildings, and then service concession assets. So that is how it will be presented. Then the next aspect to consider is the liability portion of the service concession arrangement. Looking at the recognition and the measurement of the liability. So the liability is recognized for the asset, except if it is the grantor's own asset that is being used, which was just a reclassification and no new asset being recognized. The initial measurement of this liability is the same amount as what the asset was recognized at. There may be some additional payments that's made by the grantor to the operator or vice versa, which would then also impact on this liability's amount. So the nature of the liability would need to be determined based on the nature of the service concession arrangement and how the compensation in the arrangement has been structured. And when we look on the next slide at the different liability models, then you'll see what that would mean. So on the next slide, on slide 24, we have a summary of the different models in the standard to measure financial liabilities or recognize and measure. So firstly, we have the financial liability model, and then we have the grant of the right to the operator model, and lastly we have a combined model, which is a portion of each of the first two models that applies. We'll look at each of these models in a bit more detail, but just in summary, if it is a financial liability model, it means the grantor has an unconditional obligation to pay cash or another financial asset to the operator for using the asset. So this could be a series of specified or determinable amounts, or it could be a shortfall that the grantor pays to the operator between revenues that the operator gets from outside third-party users of the service or the asset, and then any specified amounts that is in the agreement that the grantor pays to the operator. As it is a financial liability, GRAP 104 will apply to this financial liability. Then also part of what needs to be assessed here is the series of payments that the grantor makes to the operator will not just consist typically of payments for the asset, but it will also include a portion that may be a finance charge, as well as a portion that relates to paying for the services of the operator. So that you have heard already when we discussed the asset. Then the grant of a right to the operator model. In this case, the grantor provides the operator with the opportunity or the right to generate revenue from the service concession asset, or it may be from a different asset that is provided by the grantor to the operator to generate revenue from. So this is seen as an exchange of assets between the grantor and the operator, and because it is an exchange transaction, it is in accordance with GRAP 9, the standard of GRAP on revenue from exchange transactions, also a revenue transaction. So in this case, the grantor will recognize revenue and will reduce the liability as the service concession arrangement takes place. So in this case, the service concession arrangement terms and conditions would need to be considered to determine how the revenue should be recognized. Then lastly, in the combined model, the grantor makes payments to the operator, which is a financial liability, as well as grants the right to the operator to use either the service concession asset or a different asset to generate revenue. So each part of the model would need to be accounted for separately, and the total liability would still be the same as with either one of the other models. So it's just the determination of the portions of the model that is different. So looking at the first model in more detail, the financial liability model. So like we've seen, it is a predetermined series of payments, which is a financial liability in accordance with GRAP 104. And that means that there is also a finance charge included in the payments that's being made. The interest rate used to determine the finance charge may not change unless there has been a renegotiated term of the agreement. Then the liability pertaining to the asset would exclude the finance charge portion, as well as the service component of the payments that's being made. So it will just represent the payments that's being made related to the asset. The service component of the payments that's being made would usually be recognized evenly throughout the service concession arrangement, unless if there were some specific expenses that has a different timing where the timing is known, then those would be recognized as they are incurred and not recognized on a straight line basis. Where payments are made in advance, then it would be a prepayment and accounted for in accordance with other standards of GRAP. So let's look at an example. Example 5 on slide 26 explains how this model works. So if you have a public entity A, which is the grantor, and it agrees to pay the private entity, which is the operator, 100,000 Rand a month for the duration of the 5-year service concession arrangement. The payment is made up of 3 different portions. So 50,000 of the 100,000 is for the asset, 10,000 is for service charge, finance charges, and the 40,000, that is the balance, is for the services of the operator. The public entity has in this case determined the initial fair value of the asset to be 2 million Rand. So it will recognize the asset and the related liability at 2 million Rand initially. If we look at the journals, it would mean that you would debit the service concession asset on day 1 with 2 million Rand, and you will have a corresponding service concession liability also for 2 million Rand credited on day 1. Then as the monthly payments are made, the 50,000 of the 100,000 that relates to the service concession asset will be a debit against the service concession liability. The service expense of 40,000 as well as the finance charge of 10,000 would both be expenses which are debited, and then you have the payment which is a credit against the bank of 100,000. Then if we look at the second model for liabilities, the grant of a right to the operator model. So because the right that is granted is effective for the period of the service concession arrangement, the revenue arising from that arrangement is not recognized immediately, but rather over time and over the duration of the service concession arrangement. And that would be usually in accordance with the terms of the service concession arrangement, how the right has been granted to the operator. The liability in this case will not be a financial liability, but it is an unearned revenue liability. So the nature of the liability is a bit different in this case. If the substance of the arrangement is to provide this right to use the asset to the operator on a straight line or on an even basis during the course of the service concession arrangement, then it can be recognized on a straight line basis. But if not, then another method may be more appropriate. So if we look at example 6, which illustrates this model, if you have public entity C, which is a grantor in the service concession arrangement, which agrees to grant the public entity D, which is the operator in this case, the right to use the service concession asset for 200 hours a month for the duration of the 5-year service concession arrangement. It can generate revenue from using that asset for its own purposes in the 200 hours. Then public entity C has determined that the fair value of the asset is 2 million Rand, and it recognizes this asset and the related unearned revenue liability initially on day 1. So the journals for that would be that you have a 2 million Rand initial recognition of a debit of a service concession asset and a credit of an unearned revenue liability. On a monthly basis, because the 200 hours that the service concession asset is available to the operator throughout the course of the service concession arrangement, it is appropriate to straight line the revenue that is recognized from making this available to the operator. So in this case, because the straight line method is appropriate, the journal on an annual basis would then be to debit the unearned revenue liability with 400,000, which is a fifth of the 5-year arrangement. And you would credit revenue then to recognize revenue in accordance with GRAP 9, also for 400,000 Rand. If, however, the 200 hours that the asset is made available is not the same throughout the course of the arrangement, then it may be not appropriate to just straight line the revenue recognition. Then another method may be more appropriate. Then if we look at presentation and disclosure, firstly, the principles of GRAP 1 would apply, but in addition to that, GRAP 32 does have some specific disclosure requirements as well. Then the quantitative disclosures that need to be made would need to be based on the terms and conditions of the arrangement. So if we look at just some of the specific disclosures included in GRAP32, it requires a description of the overall objective and the purpose of the service concession arrangement. It also requires disclosure of the significant terms of the arrangement that may affect the amount, the timing, and the certainty of future cash flows. The nature and extent of a number of different things are also required to be disclosed. For example, the rights to use specified assets, the rights to expect the operator to provide specified services in relation to the service concession asset, the service concession assets that have been recognized as assets, and that would include any existing assets of the grantor that have been reclassified. So just briefly on the scope of IGRAP17. IGRAP17 is about service concession arrangements where the grantor has a significant residual interest in the asset at the end of the duration of the service concession arrangement. The service concession arrangement is one where the grantor only controls the significant residual interest of the asset at the end of the duration. So if you think about the definition of control that we looked at from GRAP32, then paragraph 7a of the control definition, which is about whether the grantor can determine what services must be provided with the asset to whom and at what price, that part of the criteria is not met. Only the second part, paragraph 7b, is met. Therefore, the grantor does not control the service concession asset and it cannot recognize the service concession asset. So what IGRAP17 explains, in line with GRAP32, is that firstly the grantor would then assess by applying IGRAP3 whether there is a lease contained in this arrangement or not. If so, then the grantor will apply GRAP13 to account for the lease. If it is not a finance or an operating lease in accordance with IGRAP3 or GRAP13, then this IGRAP17 is applied by the grantor. So the recognition and the measurement requirements of IGRAP17 is as follows. Firstly, what the grantor will recognize is the right to receive the service concession asset at the end of the duration of the service concession arrangement. So there is a right that at the commencement the grantor has, and it will be recognized at the commencement of the service concession arrangement. It is also seen as an exchange consideration. The asset that is being used by the operator is made available by the grantor, and the grantor in return has the services provided by the operator and the right to receive the asset at the end of the duration. So this asset, which is the right to receive the asset at the end of the duration, is recognized at the fair value. And what that would reflect is the value of the asset in the condition and age that it would be in at the end of the duration of the service concession arrangement. What also occurs is the grantor not only has this right to receive the asset as an asset, but it also has a performance obligation which it recognizes. And this corresponding performance obligation is measured at the same value as the asset. Then it also recognizes revenue and reduces the obligation as the service concession arrangement takes place in accordance with the substance of the service concession arrangement. So it will depend on how access to the asset has been given to the operator to operate in accordance with the arrangement, whether it can be on a straight line basis that revenue is recognized, or maybe another way is more appropriate. Then if we look at what are the arrangements for first-time adoption, quite simply the directives prescribe that GRAP32 will be applied retrospectively, and it will be in accordance with requirements of GRAP3. Then changes to other standards. There have been no significant changes to other standards. Just to highlight a few standards that have been impacted with consequential amendments. GRAP17 on leases now mentions GRAP32 and includes a reference to GRAP32. Then all the asset-related standards have an amendment to the scope to specifically refer to GRAP32 as well. So that would be GRAP16, GRAP17, GRAP31 and GRAP103. So all of them will apply for subsequent measurement, but initially the assets are recognized and measured in accordance with the standard GRAP32. GRAP104 also includes the financial liability model now as a reference. And IGRAP3, which is the IGRAP on determining whether there is a lease, includes an example now of a service concession arrangement that conveys rights to use an asset, which would be one of the things included in IGRAP3. Then lastly, just to alert you to the potential implications of GRAP32. So the good news is that the public-private partnership a guideline that is in place, the PPP guideline, which is replaced with GRAP32, had more or less the same principles included than GRAP32. So the principles have not substantially changed. What has changed though is that the definition of a service concession asset is a lot broader than the legislated PPP arrangements that were included in the scope of the PPP guideline. So there may be many more arrangements now included in the scope of GRAP32 that were not included in the scope of the PPP guideline. So that is one thing entities should just be on the lookout for and make sure to understand whether their arrangements would be within the scope of the standard or not. Then on the asset recognition, the control approach is still more or less the same. The PPP guideline did include references to inventory, which is not included in this standard, and that's just because the inventory is usually a consequence of the service concession arrangement and not a specific service concession asset. On presentation, also just to note, like we have said before, that it is a new class of asset now, so you won't continue to just recognize a service concession asset in the class that it was in before. It will be a new class of assets. And that is it on the presentation of GRAP32 and IGRAP17, and we hope this will assist you to implement the standard. Thank you.